Hello and welcome into the KE Report. We're here today with an update from Jordan Roy-Byrne, just discussing the gold and silver markets and the miners. And really, Jordan, when we look at the last couple weeks, they haven't been that positive for the mining stocks. But when we look at the metals, gold and silver, gold really has just hung in there around the $1,800 level, and silver's been in that range between 24 to 26. It's been kind of hugging that 25 area. When you look at the metals price just flatlining for the last couple of weeks, what do you make of it, and what do you make of the disconnect that we're seeing in the stocks relative to the metals?
Well, I mean, I'm a little more focused on the shares just because I think when you see that kind of a divergence when the miners are underperforming the metals so badly, it's never a good sign for the sector, generally speaking. And I mean, it is interesting how the metals have held up a little bit better. I mean, right now we're seeing potential, I think, for a short-term rally. I mean, looking at GDX and GDXJ, they're starting to dig in a little bit. They've been very oversold. So, but there's a Fed meeting in a little bit. We'll get a statement. So, who knows? Maybe they'll say something and people will think that's good for precious metals. So it's possible they could have a short-term rally. I mean, the miners are oversold. The juniors that we talk about, that you talk about on the show, they're even more oversold. I mean, ideally, what I would like to see is the sector get even more oversold, and then we're at a low point, which could be a real significant low where we get a multi-month rebound. And I mean, I think that's still possible, maybe later this year, perhaps. But I think here and now, there is a good chance of a short-term rally in the miners. I'm not exactly sure what that will mean for the gold price and the silver price. Maybe they will stay disconnected from the miners a little bit. So it's possible we could get a short-term rebound in the miners in August, and maybe the metals don't do a whole lot during that short-term rebound because there's a lot of resistance in gold. 1830, 1840, those levels. I mean, the last rally it had was pretty weak. So I'm not banking on any big move in gold. The only way I see a big move in gold is if we see the stock market, like we talked about before. If the stock market is going to have like a 15% correction, that's something that could propel gold and the sector higher than I'm thinking right now. So I think that's something that's looming in the background. I think the potential for a market correction as the next catalyst for the sector, but I'm not sure if that's going to happen, now or 1 month or 4 months. But that's generally my view on the technicals of the sector. But I know we're going to get into the stocks. I mean, this correction has been nasty in our juniors, but I mean, it is leading to some great potential values out there.
Yeah, Jordan, it's kind of an interesting environment in that normally when we see the juniors heading down like that, they're accompanied by the seniors taking a big dive, and that's usually indicating more weakness for the metals. But since the metals have just kind of held up there while the stocks have corrected so much, it would make sense to see a bounce, at least a little bit of reversion to the mean, because the stocks have sold off like we're at $1,400 gold or like we're at $18 silver, and we're really not there. There hasn't been a big change, so it may just be that they got overdone. One real quick question before we move on to the stocks, though, is if there was a market correction, I would guess that some of the safe haven flows may find their way into gold. Wouldn't you still imagine that the miners would get hit even harder during that market sell-off, or do you think that because they're tethered to the price of gold, they may not pull back as hard as they did, let's say, in the 2008 or 2009 crisis when they were at much higher levels when that crisis hit?
Yeah, I don't think we'd see anything like that. I mean, the during this type of situation, you will see gold. I mean, if we do get it, let's say 15% correction, you will see gold outperform the stock market for sure. And throughout most of that, you would probably see the miners underperform gold. But then, of course, after the fact, they would really outperform gold on the rebound. I think, in nominal terms for the miners, it really depends where they are coming into the correction. Like if we started a correction here and now, I would say, yeah, well, GDX, maybe it drops 10% to 30, maybe GDXJ drops 10% to 41 or wherever. I mean, those are really strong support levels I've been looking at. Maybe that's possible that they could drop a little bit before they rally. The only way I'd be worried about a significant decline in the miners would be like, let's say we had a fantastic August where they had a great rebound, and then the stock market was going to correct significantly in September, then at that point you could see the miners come off, more than I'm thinking. So it kind of depends where they're sitting leading into the correction. If they're really oversold, they probably wouldn't get hit that much. But if coming into the correction, if they rallied going into it, they would probably give all that back. But honestly, in the big picture, it really doesn't worry me because you get a significant correction in the stock market every time this has happened recently. I mean, 3 times in the last 6 years, it's springboarded really great moves in precious metals. So even if precious metals sold off with the stock market, on the other side, they would really outperform and it wouldn't matter. So that's kind of how I'm looking at it.
Yeah, that's a valid point. They would eventually catch up and they would eventually outperform. So for investors that are looking at now and they're seeing this weakness, and you brought up a good point at the beginning of the call here that compared to GDX and compared to GDXJ, some of these junior miners that many of us are invested in and many of the people we bring on the show, they're down 30, 40, 50% in a fair bit of time here. And so investors are wondering, should they sell? Is this sector dead? Is it dead, left and dead for good? Or if there is a bounce, should they be getting positioned now in front of that bounce? And if it does bounce, what levels would you want to see things go to where you would think, okay, this could be sustained a little bit? Because most of the bounces we've seen really since last August have just been sold into.
Yeah, really great question. I mean, as far as what investors should do, I mean, everybody's different, so it's hard to give general advice. I mean, generally, I'm looking for things that I can hold for a couple of years that I think are going to add lots of value. If you're not someone who could just hold indefinitely, I would say cut your losers, anything that's down 20%. So proceed that way. But the question of whether the bounce will be sustainable, I think it's not, and you will never hear a technical guy say this, but it's really not a technical. It's not a question of technicals like, oh, will gold go over this level? I mean, in a way it is, but it's really going to depend on the larger macro situation. I mean, are real interest rates going to plunge and make new lows? I mean, that would be, I mean, if that happens and it sustains, that's really bullish for gold. But at the same time, I think it something has to happen with the stock market. I mean, because if it keeps trending higher, money is going to stay in the stock market in those types of assets, and it's not going to go into gold. So there's no reason for capital to move into gold if the stock market keeps chugging along, keeps moving higher. But I mean, again, if we get a 15% correction, and this is a real, and the Fed says, okay, well, we're not going to taper, we're not going to raise rates anytime soon. They're going to do a total 180. Maybe that's something that could give you a real sustainable rebound in precious metals. And it also depends, how oversold gold is going into that type of stock market correction. I mean, if gold's down at 1675 and we look at the sentiment indicators and it's really oversold and it looks like has been some kind of a washout, then I think, and at the same time the stock market corrects 15%, I think that's where you can kind of buy and hold from that level. So it has to be something on that shifts the macro landscape. It's not going to be moving over a certain level. I mean, at least that's how I see it.
Okay, that makes sense, Jordan. I appreciate you sharing that perspective. There's no doubt that right now the miners are not overbought, and they're definitely not too pricey. At least most of them. So you write to your subscribers at the Daily Gold and send out some different ideas, and you're always looking at different companies in the sector. I thought it'd be nice just to dig in and look at, right now when people are building their watch lists and when they're getting their shopping list together, what they may want to acquire while the pricing is down or if it even heads lower. What are the kind of companies that you're looking for? And within those subsectors of, let's say, the explorers, developers, producers, what are some of the sweet spots you see, or what are some of the things you want to see come together when you're looking at adding a position into your portfolio?
Well, for me, it's how much, the potential to add value over the next couple of years. And I mean, the value, because I say fundamental quality a lot and it sounds trite, but I'll define it for you. What that really means is they have an asset that has economic potential. So adding value is adding more economic potential to that asset because that's how all these things trade. It's what's the economic potential of the company, their projects, etc. So that's really what I'm looking for. I mean, as far as I'm right now, I'm focusing a little more. I should say a lot more actually on producers and developers, growth oriented producers and developers that they're funded or they will get funded to be able to build their mine and it's a mine that has potential to scale to a larger size. So it's not just, well, we're going to produce 120,000 ounces and that's it. That's all we have. That's not what I'm looking for. I'm looking for developers that they can build a mine, but it has growth potential beyond what it's going to produce in the first year or two. And then circling back to junior producers, I'm looking at those companies that have production growth potential, and maybe the ones that I missed, I didn't buy in the last year or two that are have corrected significantly, but there's really nothing wrong with the business. So I'm zeroing in on those types of situations because I think that, if metals prices are fixed for the next year or two, I mean, not my prediction, but if they stay where they are, these types of companies, they are still going to be able to add a good amount of value, relative to flat metals prices. But I mean, the real kicker is, when the larger bull market resumes and gold eventually breaks out, makes a new all-time high, that's really going to turbocharge and leverage the potential of these companies. I mean, that's how you can get, depending on the company, that's how you can get, 5x, 7x, even 10x your gains if you buy these types of situations and they're around a low point. If they're trading 30, 40, 50% off their high a year ago, you get that entry point, and gold in the next couple of years makes a sustainable move higher, and these companies execute. I mean, to me, that's one of, I don't want to say safest, but that's one of the most realistic ways you're going to make 5x, 7x, or 10x because in small exploration companies, yeah, there's that potential, but it's hard to know who's going to find what. It's just a gamble. So to me, I like there's relatively speaking, there's a lot more certainty and growth oriented producers and developers. And so that's what I'm focusing on. And there's not a lot of these types of situations out there. I mean, I wish there were, but there's really only a handful. And so I'm looking for, I mean, I do have two on my watch list that I'm liking, that I'm looking into a lot more. But I'm hoping to maybe find one or two more that fit the bill in terms of, they have this potential to add a significant amount of value and then the potential economic gain could really be leveraged when the bull market resumes.
Yeah, Jordan, you brought up a couple great points there, and I agree. I mean, everybody loves a good exploration story, but nobody knows if they're going to hit. And they can have explosive gains, but there's really nothing underpinning some of these bigger valuations we sometimes see in the explorers. But with developers and growth-oriented producers, there is assets in the ground underpinning the value, and there is a margin of safety there that hey, at least in a gold bull market or a silver bull market, these guys have pounds in the ground. So the other thing we had talked about off mic that might be interesting to mention here just briefly as we wrap up is you had said it was the holy grail of companies if a developer producer also has exploration upside. And I think that's a great point that gets overlooked a lot. That people think, oh, developers, they're just sitting there working on their mine. They've got a lot of risks. They got a lot of capital to raise. But a lot of those companies are still drilling out a deposit and maybe going at depth and finding even better resources in the sulfides than they had, or they're finding a satellite pit right next to the main pit, or maybe a second resource right next door adjacent to the one they've already found. And that developer can still grow, and it's the same for producers. They can still grow through the drill bit. So maybe just talk to us a little bit about what is this holy grail that you're looking for, and what kind of, what are you looking for in a company that has that kind of a setup?
Well, the holy grail is when a producer or a developer has significant exploration success that adds value to the project. I mean, if we just go back over the last 4 or 5 years, some examples are some obvious examples. I mean, Kirkland Lake. I mean, that's like the godfather of that. They're at their massive discovery there at the Fosterville mine. I mean, that was a complete game changer for the company. And it doesn't even have to be on that scale. I mean, just look at what K92 Mining did. I mean, that's another similar situation. Completely changed the potential of the company at their project. I mean, that's one of the that might be one of the best, absolute best projects, operating projects that a junior owns there in Papua New Guinea. So that's another example. Wesdome, is another example of that at depth at their Kiena mine. There's even I'm thinking of a smaller producer. I'll tell you off mic, but they've had some exploration success that's really helped them out, but no one really mentions it. So to me, I mean, when these companies have production growth potential already, they have a good amount of cash and they're exploring, and they have a real chance where they can add value through the drill bit. Again, that's the holy grail. And so, looking at the two developers that I have on my watch list, well, one's actually a producer, but they said, we are going to drill 70,000 ounces every year. We have to replace what we mine, and we're really looking to make that game changing discovery. And this is a company that produces a significant, not like 50 or 70,000 ounces, they produce a significant amount of gold. At the same time, this other developer, I own it. It's not on my watch list, but the CEO said, this study and these types of mines, like this is the bare bones production level. Like, when this starts to produce, we're probably going to be producing more than what it says in the study. And I mean, this is from someone who's built $1 billion company before, not just somebody who has no track record. So you obviously have to take that into account. But I mean, as an investor, that's what gets me excited, because I know that there's real potential that they can find something and it's going to enhance what they're already producing or what they eventually will produce when they build the mine. And so, I mean, again, it's just the holy grail. It helps a company so much, especially a producer or developer, when they can add value to the project through that way. Because if the market is not factoring that in, and generally speaking, if they don't have that much growth potential, then it's almost like they're an optionality play. They're just going to follow the gold price. So to add exploration potential, to a mine that is already producing, is already generating cash flow, or a mine that is going to be built, I mean, to me, that is so significant. And that's, they already have the infrastructure, so they don't need to raise a bunch of capex. They can just throw it into the mill or whatever. That to me is, I mean, it's another way for exploration to really turbocharge the potential gains.
Really great thoughts there, Jordan, and we'll kind of wrap it up there. But I think you make some great points that really exploration across the board gets rewarded by the marketplace. And if there's developers or producers that are stuck and stagnant and they're not growing with the drill bit, then they really do become more optionality plays in the price of metal. But for those producers and developers that are out there, and there are some if you pick through them, that have intense drill programs and they are meaningfully trying to expand their resource, that's the value creation that you're talking about. And investors can still be well paid and have very good multi-bagger returns in a bull market when a company is growing at the same time that there's price appreciation in the metals. But even if the metals flatline, if a company is growing through exploration, regardless of their size, sometimes that can really move the needle and still give investors some nice upside. So if people want to get more thoughts like this from Jordan or have any questions for Jordan, definitely check him out at The Daily Gold. And also, you can always write either Corey at Fleck at kereport.com or myself, Shad, at kereport.com with any questions, and we'll get back to you. Thanks so much, Jordan, for coming on the show today.